we did service tax valuation today. From an exercise perspective, we saw valuation where there was a focus on the section, and then the section talked about various conditions which had to be satisfied. If you fail those conditions, then the valuation rules got triggered. That's how exercise is structured. Customs is structured differently, where the entire valuation will be triggered only through the valuation rules, even though there will be some guidance to the section. Service tax is very peculiar, it's a hybrid. How it works is, the operating part of section 67 talks about gross amount charged for services provided or agreed to be provided. We are talking about law as on 30th April. Therefore, we are not bothered by the Finance Act 2015 amendment, which is a significant amendment. So, law prior to Finance Act 15 is that gross amount charged for services provided or agreed to be provided. So, if you have a transaction where this is the amount which you are charging for services, that will attract service tax. Now, it became a controversy in the sense that what exactly constitutes gross amount charged for services provided. I will give you multiple examples, then you will understand why this controversy came. The first one is, let us take a classic example of a chartered accountant. A chartered accountant providing professional services. He provides audit functions, he provides advisory functions, or he provides appearance before tax forums. And then he raises a bill. And in that bill, he raises professional fee. And then separately he raises a debit note for expenses. To and fro travel, boarding, lodging, whatever, there's a debit note. Take another case. A customs house agent appointed by you. This customs house agent appointed by you is supposed to go to the port, clear the goods for you, file all the paperwork, ensure goods are handed back to you. Now, when this guy has to clear the goods for you, he'll have to file the bill of entry, he'll have to ensure the entire process is triggered, he'll have to pay the port charges, he'll have to pay the wharf charges, he'll have to pay the terminal handling charges, he'll have to arrange for local transportation, packing, unpacking, loading, he'll have to pay some other statutory agencies fee, he'll have to get some wildlife clearances, some license fee, he has to get some chamber order fee. And then he prepares the papers for which there is a fee, document fee, processing fee. And then he pays customs duty on your behalf, which is a huge amount. He also pays ocean freight, which is the money that is required to bring the goods from abroad into India, or he pays air freight. Now, you are the importer, you have given him a lump sum money. And this money is supposed to be used for him for all these purposes, and he is supposed to account. And he will raise a bill in which he will clearly specify ocean freight, air freight, terminal handling, all the items will be identified, and then his professional fees. And he will pay service tax on the professional fees. And if you look at customs house agent bills, it will be very, very interesting. You will find the fees will be something like 1 lakh, and the other items which are not taxable can be 75 lakhs. Because freight is the biggest constituent in this transaction. So you look at chartered accounts bill, you look at CHA bill. Then there is a third guy, manpower supply fellow. He supplies you manpower. He employs 100 people, and then he sends 100 people to work for you. Now, when he supplies manpower, there is a temporary supply of manpower, therefore there is a service, and then he incurs all the costs, salary, ESI, PF, all of the statutory requirements in respect of these employees, and then raises a bill on you, item by item he tallies, salary, ESI, PF, etc. Processing fee 10%, sourcing fee 10%. Then 5.2 says, the cost or expenditure incurred in the course of providing services will not form part of value if the following conditions are satisfied. So, since now we have got the PPT, I will go straight to the rule and then come back to the other aspects of the section. Give me these. One of the rules, where any expenditure or costs are incurred with the service provided in the course of providing taxable service, all such expenditures or costs shall be treated as consideration for the taxable services provided and shall be included in the value for the purpose of charging service tax for said service. This is what the rule says. 5.2 says, expenditure or costs incurred by the provider as a pure agent of the recipient service shall be excluded from the value. In other words, if somebody has got to say that please don't include these costs in expenditure. They will have to demonstrate pure agency. So what exactly is pure agency? Is a bundle of conditions, and all of them are quite crazy. If you look at those conditions, you will realize that how can you say the same thing again and again? It's an art of repetition. The service provider acts as a pure agent of the recipient of service when he makes payment to the third party for the goods or services procured. Fine. The recipient of service receives and uses the goods or services so procured by the service provider in his capacity as a pure agent of the recipient of service. The recipient of service is liable to make payment to the third party. So these three are very critical conditions. You act as a pure agent at what point of time? When you make the payment to the third party. And when you make a payment to a third party, you are acting as an agent on behalf of somebody, and the recipient of the service is the person who is actually liable to make the payment to the third party. You are only a post office in between. The primary liable to discharge this particular amount is on the guy who has engaged you, and you have stepped in and you are incurring expenditure on his behalf. So primary liability is on the third party, on the recipient. The recipient of service authorizes the provider to make the payment on his behalf. Your agreement must very specifically state that I hereby engage you as an agent. I also direct you to incur expenditure on my behalf. The recipient of service knows that the goods and services for which payment has been made by the service provider shall be provided by a third party. He knows that you have to go to the customs department. He knows you have to pay the customs duty. He knows you have to pay the ocean freight. He knows you have to pay the terminal handling charges. He knows everything. That's why he's engaged you. He doesn't want to go do all that. What's the point? The payment made by the service provider on behalf of the recipient of the service has been separately indicated in the invoice issued. You can't have a lump sum. So in the agent's bill, customs service bills, you'll normally have two columns: non-taxable, taxable. So all those items where he claims as reimbursements, all those items where he claims that there is no question of service tax on it, he'll put in the non-taxable segment, and wherever fees are involved, he'll put in the taxable segment. The service provider recovers from the recipient of service only such amounts that has been paid by him to the third party. That means no margin, no markup, no profit. Actual expenses incurred by payment to third parties will be recovered. That means he has to substantiate with documentary evidence to show that there is no markup. The goods or services procured by the service provider from the third party as a pure received service are in addition to the service he provides on his own. Obviously, he is engaged to do clearing function. He is engaged to do paperwork. He is engaged to do documentation. A chartered accountant is engaged to go to the tax court and argue. He is engaged to go to the income tax department to complete the assessment. A manpower supply agency, technically speaking, is supposed to supply services. He is not being engaged to do all the other things. He is required to pay, he is required to incur travel expenses, he is required to incur ocean freight, he is required to incur certain costs. So that's how you look at it as a perspective as to what is cost or expenditure. Now one other crucial condition is, which we saw earlier, the recipient of service receives and uses the goods or services so procured by the service provider in his capacity as a pure agent of the recipient of service, and he is duly authorized. Now in manpower, there can be a critical question. Your job itself is to employ 100 people. Those 100 people are your employees. You are incurring salary on their account. How can you say that you are incurring expenses on my behalf when you are making them available to you? That can come as a question. Because if you say that the manpower company is incurring expenditure on behalf of the other client, then technically the employees can claim benefits from those days. So if you look at a manpower supply contract, it will be very well drafted. It will say that parties operate on a principal to principal basis. This document does not create an agency. That means if it is not even agency, how can it become pure agency? So manpower supply can be very tricky when you want to say that salary, ESI, etc. will not form part of value. Therefore, most companies discharge service tax on X plus Y, the C2C as well as the service charges. But for a chartered accountant who is going to argue a tax matter, he can very well say, look, I don't have to travel. It's your cost. Debit note. You are asking me to go to appear in Delhi, I'll stay in the hotel. Debit note. There's no necessity that he has to incur this expenditure. It's your call. But if you are a chartered accountant operating as a statutory auditor, then you have no business to say that I am a pure agent of the client. You can't be an agent. You are an auditor. And you know this basic requirements of audit and what all you are supposed to, you must growl, you must bark, you must not bite, all those concepts. So you have that kind of a role. If that kind of a role exists, you cannot have an agency kind of transaction. If you cannot have an agency kind of transaction, a statutory auditor has no business to claim these reimbursements is not forming part of value. Most of them pay service tax on reimbursements. So you need to look at the question in the exam as to what is the nature of the services provided, and then look at whether it will qualify as pure agents. So these are 5-2 in terms of conditions which have to be satisfied. If you satisfy all these conditions, then the cost and expenditure incurred will not form part of value. And a pure agent is also defined. Who is a pure agent? A person who enters into a contractual agreement with the recipient of service to act as his pure agent, to incur expenditure of costs in the course of providing taxable service, neither intends to hold nor holds any title to the goods or services so procured or provided. Now this becomes again tricky in the case of a C&F agent. A clearing and forwarding agent is appointed by, let us say, a FMCG company, saying that I shall dispatch goods to you, you stock it, and then after stocking it, you deliver it to whomever I say. So this guy has got a warehouse. He rents the warehouse from a landlord. And that warehouse rent is paid to the landlord and recovered from the client. Now the question is whether the warehouse rent will qualify as a reimbursement. Of course, FMCG company will say that I shall engage you, you shall hire a warehouse, you shall incur on my behalf, all those things will be there. Now the question is, let us look at the lease deed between the warehouse keeper or the C&F person and the landlord. There, lessee will be C&F, not FMCG. It won't be on account also. If it's on account, it's fine. Therefore, look at the second condition. He neither intends to hold nor holds any title to the goods or services so procured or provided. Now, the lease which he gets, he's got title to it. If he's got title to it, it may be difficult to say that it is a pure agency kind of reimbursement. So these are very onerous conditions, very difficult conditions. For me to establish it's a pure agency, it's a very tough call. Here, Delhi High Court struck down Rule 5, one of the valuation rules, which provides for inclusion of expenditure of costs incurred by the provider in the course of providing taxable service, the value, on the ground that it is ultra-virus, section 66 and 67, and travels much beyond the scope of the said sections. So Delhi High Court struck down the rule itself. So now what happens? Controversy. If you are operating in Delhi, Delhi High Court is applicable. If you are not operating in Delhi also, Delhi High Court should apply. But the department says, no, only for Delhi will apply Delhi High Court. Matter has to be resolved by the Supreme Court at some point of time. So this controversy was attempted to be arrested by Finance Act 2015. That amendment will not apply for this exam. But just for your knowledge, Finance Act 2015 has added an explanation or substituted the explanation to section 67 and redefined consideration. And they now say, consideration shall include cost or expenditure incurred in the course of providing service unless it does not form part based on the rules framed in this behalf, conditions framed in this behalf. In other words, the 5.1 and 5.2 has been given life by amending section 67, but it is a prospective amendment. Therefore, for the future period, these rules have got one more round of life. For the past, they are dead. So from an exam perspective, you can apply the rules, give the answer, and also put a note. It is also relevant to note that the High Court has struck down 5.1, 5.2. Okay. You can't answer, for example, if you ask any reimbursement question, you can't say, no, 5.1, 5.2 struck down, I won't give you answer. Okay. Especially when they spend 1.5 pages for all those numbers and facts, etc. Okay, what are they? They will probably list out. You can make out whether it is reimbursement or not when you look at the expense. For example, let us take, give me some service product. Let me look at some expenses. Give me a name, some service product. Except what you have discussed. We saw CA, we saw CHA, we saw manpower supply. Any other fellow? Travel agent. Air travel agent. Classic example. An air travel agent, his fee is commission, not the air ticket. Okay. There he is paying to the airline on your behalf. He does not have any title to the expense. He is recovering only that amount. Therefore, he will satisfy all those conditions. So obviously, it will not form out a value. Only his fee will attract service tax. So every service provider might or might not incur expenditure. See, for example, today, let's look at, we discussed this renting a mobile property, remember? In the case of renting a mobile property, electricity charges. Whether electricity charges should form part of value of rent or not. What is the answer? No, on two grounds. One, it is reimbursement. Second is can be goods. So that reimbursement will also become pure agency. You will are satisfying all those rules. Plus it is not a consideration. So multiple reasons are given as to why electricity will not form part of value. So given any example, you have to look at the section, look at the rules and then see whether pure agency is satisfied or not. Now let's go back to the section for seeing other aspects. In case consideration is in money, in case consideration is in money, let us go to the first slide. Gross amount charged by the provider for such services provided or to be provided by. In case it is for a consideration not wholly or partly consisting of money, such amount in money as with the addition of service tax charge is equivalent to the consideration. And in case it is not ascertainable, then you go to the valuation rules. Prescribed means rules. Now let's look at the second one. Consideration is 1 lakh, money 50k, and then the client gives you goods worth 50k. He pays you money 50k and he gives you goods worth 50k to the provider. Service tax is payable on the 1 lakh and this has to be calculated 1 lakh multiplied by 12.36 divided by 112.36. Therefore, you assume that the tax element is loaded in it, inclusive on it, and then try to eliminate. Therefore, value would be 1 lakh minus 11,000, that is 890. This is what is called as a cum duty transaction or cum tax transaction. Service provider raises a bill of 50k inclusive of service tax, value shall be calculated accordingly. Almost similar example. Gross amount shall include any amount received before, during or after provision of service. All forms of time, all periods of time is covered. In fact, it is ludicrous to say that service tax is payable before the providing of service. Therefore, they covered anything. Payment by check, credit card, deduction from any account or any form of payment issue, credit notes, debit notes, book adjustment, and any amount credited, debited as the case may be so and so, so and so. This language, does it sound familiar? Does it sound similar? Have you seen elsewhere? Anybody? Go to TDS sections. Go to 194J, go to 194I, go to 195. You will find the same language. Okay. Payment, account, debit, credit, any account, by whatever name called, suspense account, all those language will be there. So they borrowed from. Inputs definition, capital goods definition, then it will go to input service definition, then it will go to conditions for each of these.